My name is David Mitchell, and for 7 years I was Senior Accounting Manager at GlobeTel Communications, once America's second-largest telecommunications company. I witnessed firsthand how clever accounting tricks turned into the largest corporate fraud scandal in history, wiping out $180 billion in shareholder value. This is my confession, my warning, and my attempt at redemption. In 1997, I joined GlobeTel with boundless optimism. The telecom industry was booming, and GlobeTel was the rising star, aggressive, innovative, and seemingly unstoppable. Our CEO, Victor Simmons, was a charismatic Southern businessman who had built the company from a regional provider into a global powerhouse through more than 60 acquisitions in just 6 years. The corporate headquarters in Dallas exuded success. Marble floors, modern art installations, and floor-to-ceiling windows reflected the company's soaring ambition. My corner office on the 32nd floor overlooked the city skyline, a daily reminder that I had made it in corporate America. "We're not just building networks," Victor would say during company meetings, his voice resonating with conviction. "We're connecting humanity, and Wall Street is finally recognizing our vision." Wall Street indeed loved Victor. Our stock had risen from $20 to $86 in just 3 years. Financial analysts routinely rated GlobeTel as a strong buy. Business magazines featured Victor on their covers, praising his bold leadership and revolutionary approach to telecommunications. Everyone wanted a piece of the success story. My first inkling that something was amiss came in early 2000. Internet companies were beginning to struggle, and telecommunications spending was slowing. During the quarterly closing process, I noticed our expenses seemed unusually low compared to our competitors. When I inquired about this to my boss, CFO Lawrence Garrison, he gave me a tight smile. "We're just more efficient, David," he said. "Besides, we need to hit our numbers. The market expects 15% growth, and we'll deliver it." Over the next few months, I started noticing a pattern. Every quarter, intense pressure would build as we approached the closing. If the numbers weren't meeting expectations, Lawrence would visit the accounting department late at night with adjustments. The technique was surprisingly simple, but devastatingly effective. Operating expenses were being improperly capitalized, recorded as assets on the balance sheet instead of as expenses on the income statement. By this accounting sleight of hand, billions in ordinary costs disappeared from our quarterly reports, artificially inflating our profits. The deception extended further. We began recording line costs, fees paid to other telecom companies to use their networks, as capital expenditures, spreading the expense over years instead of recognizing it immediately. It was like claiming your monthly rent was an investment in real estate. I confronted Lawrence about this in the fall of 2000. We were alone in his office overlooking the city lights. "These entries don't follow GAAP," I said, referring to generally accepted accounting principles. "We're capitalizing ordinary operating expenses." Lawrence leaned back in his leather chair, studying me carefully. "David, do you know what happens to our stock if we miss earnings by even a penny per share?" "That doesn't justify. Victor has built this company from nothing. Thousands of employees depend on us, millions of shareholders. The economy is just in a temporary slump. We're making adjustments to get through it." "But these aren't adjustments," I insisted. "This is fraud." Lawrence's expression hardened. "That's a serious accusation. These decisions have been reviewed and approved. If you're uncomfortable, perhaps you should reconsider your position here." The threat was clear. I had a mortgage, 2 kids in college, and a wife battling cancer. I told myself this was temporary, that the company would correct course once market conditions improved. I was wrong. The accounting manipulations only accelerated. What started as $150 million in 1999 grew to $3 billion in 2000, and by 2001, we were hiding nearly $11 billion in expenses. The deception required an ever-expanding circle of participants. Auditors were misled, documentation was falsified, and internal controls were overridden. At night, I would stare at the ceiling, unable to sleep. I had become an accomplice to what would eventually be exposed as the largest accounting fraud in American history. But the company's stock kept rising, and executives kept collecting multi-million-dollar bonuses. Many employees, including myself, had most of our retirement savings in GlobeTel's stock. In early 2002, a new member joined our accounting team, Stephanie Chen, a methodical, detail-oriented professional with previous experience at a Big Five accounting firm. Within weeks, she began asking uncomfortable questions about our capitalization practices. "These entries don't make sense," she told me privately. "We're treating operating expenses as capital investments. This inflates our EBITDA artificially." I avoided her gaze. "The CFO has approved the methodology." "That doesn't make it right," she persisted. "Have the external auditors reviewed these specific entries?" They hadn't, at least not in detail. Our audit firm, Barrett & Williams, seemed more interested in the consulting fees we paid them than in scrutinizing our accounting practices. Stephanie continued her investigation discreetly, compiling evidence of the manipulation. In April 2002, she bypassed the entire management chain and sent her findings directly to Gregory Wilson, the head of our audit committee. The house of cards began to tremble. What followed was a hurricane of activity. External investigators were brought in. The SEC launched an inquiry. Lawrence was placed on administrative leave. Teams of forensic accountants descended on our offices, examining years of financial records. On June 25, 2002, GlobeTel's shocked the world by announcing it had improperly accounted for $3.8 billion in expenses. 3 weeks later, the company revealed the full extent of the fraud. $11 billion, spanning 5 quarters. It was, at that time, the largest accounting scandal in corporate history. Our stock, which had been trading at $64, plummeted to pennies. The company filed for bankruptcy protection, the largest telecom bankruptcy ever. Over 17,000 employees lost their jobs. Retirement accounts were wiped out. Investors collectively lost $180 billion. The aftermath was brutal. Victor was sentenced to 25 years in federal prison for securities fraud. Lawrence received 12 years. Several other executives faced substantial sentences. Barrett & Williams, our accounting firm, dissolved after being found guilty of obstruction of justice for shredding documents. And me. I cooperated with investigators, providing detailed evidence of the fraud in exchange for immunity from prosecution. I testified before Congress, was deposed in countless lawsuits, and watched my professional reputation dissolve along with my financial security. The personal toll was immense. My marriage crumbled under the stress. Former colleagues treated me as a pariah, either for participating in the fraud or for helping expose it, depending on how it affected them personally. I struggled with depression and the overwhelming guilt of having been part of such massive deception. Today, I teach accounting ethics at a small college in Vermont. I use my experience to show students how seemingly small compromises can spiral into catastrophic fraud. I tell them about the warning signs, the rationalizations, and the devastating consequences. The GlobeTel's scandal changed corporate America. It led to the Sarbanes-Oxley Act, which dramatically increased the penalties for securities fraud and required greater independence for auditors. It forced companies to implement stricter internal controls. It reminded everyone that accounting isn't just about numbers. It's about truth. What haunts me most are the faces I'll never see. The thousands of ordinary investors who trusted our financial statements, who believed in GlobeTel's story, who lost their life savings because of our deception. Elderly couples who postponed retirement. Parents who couldn't afford college tuition. Small investors who believed in American capitalism and were betrayed by it. I often wonder what would have happened if I'd spoken up sooner, if I'd had the courage to blow the whistle before the fraud grew so massive. Perhaps fewer people would have been hurt. Perhaps I could have saved some of those billions from vanishing. Perhaps I could have preserved my own integrity. If you work in corporate America and witness something that doesn't seem right, remember GlobeTel. Remember that just following orders is never an adequate defense. Remember that the truth eventually emerges, and when it does, the consequences can be catastrophic. As for me, I've accepted that my legacy will always be tied to this historic fraud. I can't undo the past, but by sharing my story, perhaps I can prevent future David Mitchells from making the same devastating choices I made. The $11 billion lie destroyed countless lives, including, in many ways, my own. Some debts can never be repaid.